can't sign up for Weibo because I am from Europe. Yes, yes, you can. I am also from Europe. I'm from Cyprus. We're a small island in Europe. You don't need to sign up for their broker. You just need to download the software. Okay, so what you want to do is you want to go to Weibo.com. Tell me if you're following me, okay? And you create an account. And then, I don't know if it will let me show you because I already downloaded, but you go to downloads and you download Weibo for desktop version. I also have it on my mobile. I'll show you. And it's one of the nicest things to use because a lot of times I'm trading on the road and I'm trading. Gert knows this. We were traveling Greece while I was trading in November. So I was trading on buses and I was trading on boats and it was really fun. So you have everything on your phone live. It's really cool. It's called Weibo. It's free. Download it. They will ask you, I think, for 3 months for free, and then it becomes pay. But I haven't reached that level yet, even though I have it like 5 months or 6 months. They haven't asked me for a pay yet. So I don't know. Also, I would advise each and every one of you, you have time until people arrive. So let's talk about general things that are important for traders. Tools are key. Tools are key because what we're trying to do is we're trying to level the playing field between us and what Wall Street got. And you will not believe what Wall Street got. Okay, they have in-depth market tick by tick. They can see any order that comes in and comes out before we can see it, so they can plan their next move. With all the respect to Weibo, it's not even 5% of what they have. So in Weibo, you can see orders coming in and coming out, which is great, but they see it in bulks, meaning they can see how many orders collectively are going to be sold and bought every second in bulk, including institutional and so on. So they have tools that we don't. So what I'm trying to say is we want to level up the playing field and surround ourselves with as many tools as possible to try and level up the playing field. So one of the things I also recommend is try to trade with brokers that have MetaTrader 5. MetaTrader 5 is a software that is a third-party software. I'll give you some background. I was working with brokers. I'm training trading rooms in Cyprus. That's why I live in Cyprus. I'm originally from Israel. I train brokers in trading rooms, and MT5, MetaTrader 5, is a third-party software which the broker needs to pay a certain amount of money according to how many users he has. The amount of money begins with $40,000 per month. So the MetaTrader 5, because it's a third-party software, it's a key. Why? Because they can't play games. This basically tells you if they can play games, everybody can play games behind your back, but it will be much harder for them to play games with you when you have MetaTrader 5, because they will need to contact MetaTrader 5 in a way. It's an API connection, but they will need to contact MetaTrader 5 in a way in order to play that game with you. Having said that, this is very important. A lot of brokers are working with MetaTrader 5 that are not regulated. It doesn't necessarily mean they have to be regulated. So be careful who you're trading with. We're working with AAA. Obviously, right now, you're not seeing my account because of regulation reasons, but we're working with AAA and they have MetaTrader 5. So that kind of help you decrease the risk of being manipulated. When you're trading web versions, like we saw on Robinhood 2 weeks ago, we saw high manipulation. If you're trading with 212, you will see high manipulation when the volume goes up. So I want you guys to see, for example, if you're using 212, because I know it's very common in this group, what happens when a stock is shooting up. If a stock right now is going $5, $6 up, a $20 or $30 stock going $5 up, you will see that the price you're getting to buy a stock, I'm not talking CFDs. CFDs is manipulated, crazy manipulated in 212. I'm talking about actual underlying assets buying the stock. Please ask me questions if you don't know what I'm saying, what is CFD or whatever, so I can explain, because I'm going a bit fast maybe. If you are working with 212 and you see a stock going up $5, you will see that the price you are getting compared to the real price of the stock it can be even, like I said, $2, $3, $5 up from the real price. And that is illegal, by the way. They're not allowed to manipulate underlying assets because you're buying a share, a part of the company. I'm sure you guys know that. So when I'm buying a part of the company, there's no way that it's called equity. There's no way that I'm buying equity in a business. Let's say right now I want to buy a pizza place, okay, a restaurant. And we agree that a percentage of that restaurant, 1%, is worth, I don't know, $20,000. So now the pizza place has more people coming in today because it's a Saturday and I have 100 people instead of 50 people. So my percentage all of a sudden will be worth more money. No, that doesn't have anything to do with that. The percentage of my value from that pizza place is determined by the earnings of that pizza place by quarter or by year, just like a stock. So you don't play with that game. So it's very important we trade with right tools. I'm not necessarily saying you work with 212. I'm just saying work with brokers that don't play games. I don't have names to give you because it's very hard to find brokers that don't play games. One way to do it is to work in front of your bank or in front of an institution of some sort. But if you work in front of an institution, the problem is most of the time, the execution needs to be done manually, meaning you need to call or you need to send an email or you need to send an order that is not immediate. Sometimes you can send orders online. It's also something that is starting to trend on institutionals. That's in the last 2 years, 1 in a year and a half. But it's still a very slow process because institutions, what they do, they buy in bulk. So they don't buy for you 10 stocks. They will get your 10 stocks, they will get another 10 stocks and another 10 stocks, and then they will send the order out. They're not going to send the order out for every 10 stocks because they're paying a fee every time they're going out to the market. So you want to avoid slow execution like that. On the other hand, you want to avoid manipulation of online brokers. So you got to find the middle ground. AAA is not perfect. The reason I like AAA is because they are a liquid provider. So they are a market maker and a liquid provider. That means that we are not interesting to AAA in any way. They're not. They don't care about us because what they do is they use a liquid provider liquidity to let people go out to the market. I'm trying to put it in simple words. So they give the ability to people to go out to the market. When I say people, I mean institutions. So if I am a broker, my name is. I'll give you a broker I worked with, and they're on our webpage. By the way, I built the trading room there in 2019. So they're called FXDC. So if I'm FXDC and I need to exit to the market, I will need a liquid provider. Why? Because a liquid provider on an A book will take the other side of the trade. Leroy wants to sell 100 shares of Zoom because this software sucks. I'm joking. So somebody will need to buy those shares if I'm doing A book, which means that you will need a liquid provider, a person to buy it against you. Again, I'm simplifying a lot of things here. It goes through several systems of processing, etc. But I'm just trying to make it very simple. So the people watching this now or in YouTube later on, don't say I'm missing stuff. I'm just trying to really dumb it down. Anyway, so somebody needs to take the other position. AAA is a liquid provider. That's what they do. They take the other position for brokers. And that is why I went directly to them. Because if I go directly to the source, I'm cutting the middleman. I'm getting much better conditions and much less fees. And the best thing about it is I'm getting all the possibilities because they are a liquid provider, so they can find me liquidity on any stock I want. And we saw that on AMC and GME 2 weeks ago that they didn't block the stock. You know why? Because they're using a Swiss bank in Switzerland in order to go out to the market. So it's not the same liquid provider Robinhood uses. And that's why they were not blocked. The mitigation of Robinhood to go out to the market raised the fees for them. If you guys research what happened there, they were not just trying to piss people off, but they did it because they raised the fees for processing fee of some sort. But they raised the fees so they couldn't go out to the market. The point is, when you're working in front of a big Switzerland bank directly, they can find you liquidity to any stock you want. And when I say any stock you want, it's an exaggeration. I would say 98% of the stocks that exist. Okay, there's a lot of stocks out there. And I'm not just talking about the New York Stock Exchange or the Nasdaq. I'm talking about the London Stock Exchange. I'm talking about Euronext. I'm talking about everything. So that's why I went to them. Long story short, and I saw they're using MT5, so it all kind of fit to me. So I met the owner. We sat down, and I saw how I can get it. He said, "Listen, once you have a big enough group, I can get you better conditions, and I can give you pre-market and aftermarket." Yeah. At the moment, we're negotiating with three other liquidity providers that we're trying to get for us to have access. The thing that I'm trying to do is I'm trying to collect all of us on one basket, okay? And hopefully that basket will be big enough, money-wise, that they will treat us as an institution. And then we get institution conditions, okay? So if I put right now 5,000 traders, that each one of them puts X amount of money, I collect a huge amount of money in one basket. Every person trades individually, has no connection to each other, but in front of the liquidity provider, we are all under one name, the Traders Union. And then the Traders Union is an institution. And if you're an institution, you get institution's terms and conditions. And then we're kind of leveling up the playing field. And that is why I'm working for free, because I want to get the same conditions, and I cannot get the same conditions. At the moment, I'm trading with E-Trade on a very big account in order to have that access to go out to the market. but it's an American account. Nobody in Europe can work with E-Trade. And it's kind of a shame that they have stuff we don't. So trading for other people in order to get my benefits, but that's not something everybody can do or everybody can find. So that's why we're doing what we're doing. So this is the MT5. As I said, just check it out. You have to click here. You can add, again, I'll do it again. You can add symbols here. Okay, you get another window. And here you can select any stock you want. Once you're logged into an account, it will appear here, for example. And let's choose a currency because it's a demo. And you click OK, and it will be added to your panel here. As I said before, it's very ugly, I know. I don't know why they did it so ugly, but it's like this for years now. And this is MT5. We used to work with MT4, which was actually kind of the same, but just a bit slower. And in the top here, you have the bar chart, which is 1997 style. We don't need that. We want to switch to candlesticks. And you can customize the candlesticks anytime you want by colors and so on. I think it's properties. It's been a while for me to do this stuff. Show ticker, yeah, here. So you can customize colors and so on and change anything you want. Bar down, for example, is supposed to be red, right? And so on. So here you get the window, and I don't like working with black in the background. There's a very important thing we're going to cover now when the webinar starts. I'm just I'm stalling. But there's a very important thing we're going to talk about, the colors of candles. I know it's going to be a very basic webinar. Don't expect too much. I promise we'll do more that are much more advanced. But I just want you to understand there's something called bias in our head that we have to fight when we're trading. And the bias is the colors. So I never, ever, ever trade with colors. And you can see it on my trading view analysis every time I do it. I always trade. So this is annoying. It's going to be here all the time, this thing. You guys don't see it, but I have a panel and it's blocking everything. So I work only in black or white colors. This is how we're going to do the webinar. I'm going to show you how I'm transforming the usual window into a customized window where I usually work with. And I always work with black and white. I learned this a couple of years back, actually, from a guy who was trading for many, many years. I didn't understand what he wants in the beginning. But once I started working black and white, I understood that it may sound silly. Again, this is a very basic webinar on silly stuff, but still, this affects us in a way because our mind is looking for the color we want to look. So if I'm looking for a buy position, I want to buy something, somehow my head will find the green color working out for a buy position that is better than it would actually be if it's not a buy position that I'm looking for. If you guys saw Jordan Belfort, he has lectures that he did in Vegas in the early 2000s. Jordan Belfort, the Wolf of Wall Street. So he's telling people in the room, I want you to close your eyes and count to 3 and then open your eyes and find me every red thing you can find in the room. And people will find a lot more red than they will actually have in the room. Suddenly purple will turn a little bit more reddish and dark red will turn more reddish. And so it's a thing our head does. So I never trade colors. And I'm going to talk about it again in 10 minutes for the people that are not here. All right. So we do black and white. Black means down, white means up. If you go to the website, everything I post, we're going to work on the premium validator, on the trade validator today. It's called premium because it used to be premium. Now everything is free. But you will see here you have more info on any play you want to understand, on any question you want to understand. It will always be black and white. You will never see me working with colors. Very important. Sounds silly, but it's not. So we have the chart. Again, this is a demo. That's why it's not customized to my colors. And I never actually, to be honest with you guys, speak the truth, I never use MT5 on my computer. I find it very annoying, very ugly, and very uncomfortable. I use it on my phone. I execute orders only on my phone. I execute pending orders, limit orders, whatever it is, only on my phone. Even when I trade CFD plays for 15 minutes in and out to steal $1 and get out, I still do it on my phone. I do the analysis on TradingView or Weibo, or if I want to check volumes, etc., I go into deeper systems that I don't have here on my laptop. You need a very strong computer to support specific systems. If you guys know, I think I have Ninja here. If you guys ever heard of Ninja, for example, yeah, I have it. You guys know Ninja? Anybody here met this before? It's a bit more complicated, but you want complicated. I mean, you don't want to do charting complicated. We'll see technical analysis today, and you'll see that I'm working very simple. Some people, you go to TradingView, you see ideas of people, and they go ballistic. so many lines, and you don't need that. But when I say complicated, I mean the layout of the tools are more complicated on Ninja. Ninja is a bit more in-depth for market. You connect your broker to it so you can try it out. But again, I do my analysis, sometimes volume analysis I can do on Ninja, but yes, I do my analysis on charting of TradingView, and I enter and exit only on my phone. So if you guys can see this, this is Ninja, but Ninja is like 18 things together. So it's several windows. So you have here a lot of windows that are spread apart from each other. This is Ninja, gives you tips because I don't use it on my laptop ever, but okay. So these tools these tools, when they get serious, when the market's open and there's a lot of volume, it can make your computer get stuck. So you need a strong processor and the ability to actually get a lot of information sent at once. Yeah, because the market is open, I can't show you too much on Ninja, but check it out. I'll send the link. Yes, I'm going to leave you for now because I need to customize Ninja. It takes about 40 minutes at least to customize the Ninja at first time, and I don't use it on my computer, so and on my laptop, so I need to customize in front of you guys, and it'll take a long time. But I'll just show you the software. We have like 5 minutes left before we start, so let's pass the time with learning more stuff. So there's something called Ninja. I think it's Ninja Trader. Yeah, Ninja Trader. So you go to Ninja Trader. This is the link. If anybody's interested, this is Ninja Trader. You can download it from here. I have no connection to these people, and I don't know who Ninja Traders are. I came across it and I found out that it's free. So I'm trying to give traders everything that I can give free, because if you want good tools that are free, you have to dig a lot. And Ninja has one thing that is very difficult to find. There is in-depth volume. Now, in-depth volume you can find on eToro right here. I'll move me. You have here the in-depth volume and everything, which is great, volume analysis and yada yada, but Ninja does it much more institutional like, because maybe you can see this image here, because this is the DOM, DOM. So you can see the price the orders go out and the price the orders go in, and where is the POC, where is the point of control in the volume, where is the most orders. Now, it looks like this. It's a candlestick chart. Believe it or not, this is how institutions see it. They have a candlestick chart. Again, I'm not some analyst. I'm a trader for many years, but this is what I know, and I can be wrong. And this will be on YouTube. So if I'm wrong, please teach me something I don't know. I always want to learn. This is a candlestick chart that is based on order flow. So you see this here? So this is, for example, a green candle, and this is a red candle. All right, and every candle has its order flow that looks like this on the inside, and then you have the number, the price actually, that is the most wanted price for that time frame. So if I'm looking at a 1 day order flow candlestick chart, then I will see that this price in yellow is the most price that people. Yeah, it's blurry. I know. I'm sorry. I didn't plan to speak about Ninja. I just I'm going with the flow. We will do it. Professional next time, I promise. Just want you to understand, it's called in-depth. So there's a price that they're fighting on, and the most wanted price is where you have accumulation. So the most wanted price is where people will struggle on. But this is more advanced, and I'm just going about it. You're not supposed to know all of this right now. It's really a bit more advanced. This is stuff that I learned after years of trading. What I did in the beginning was trade according to charting, and many, I would say not many years, but many months until I learned about volume and understand how volume actually works and understand how to analyze volume, etc. But this is how they see it. So they basically know what would be the most wanted price for that time frame. So what they would do is they will sell in the most above the most wanted price, of course, and will buy once they get an opportunity. Will buy by putting a limit order. So if it's $1, they will put a limit order where they see that you have accumulation of orders waiting. They will buy there by putting a limit order. And something that is very important to understand, a stock price is the most curious thing you will meet. It likes to investigate. Okay, I'm speaking I'm giving it human terms, but it would like to check every price again and again. So when a stock flies through a price, let me show it on a chart instead of just talking. When a stock flies through a price right here, it will need to return to that price. Again, every rule has an exception. There's no rules. There is guidelines, but usually the price will need to be checked again, which is actually accumulation. So they will know where to put the limit orders because they see the orders coming in before we see them, and they see the accumulation in ways that we don't see them with the in-depth market charts. And that's how they will get better prices. And if they cannot get those better prices, well, I'm holding 500,000 shares, so I can just move the price by selling a bulk of shares. Of course, they have regulations about how much shares they can sell at a certain time. They cannot manipulate the market, but they can call their friend that will call their friend, and he will sell 200, I'll sell 100, and he'll sell another 100. I'm talking 100,000, yeah? And then I'll move the price a little bit down, and then my limit order will be hit, and I'll get the price I wanted. But that's me being conspiracy, so ignore me. I hope it's interesting. I haven't worked in HSBC. I haven't worked in HSBC, or I haven't worked in any institution. I did train a lot of trading rooms since 2012. Hello, John. So I know stuff that are going in on the several first layers. I don't know the core, but this is exactly what we're doing, why we're doing what we're doing. I'm going to get us analysts, real analysts. Now, I don't think they're going to work for us from Wall Street because that will be huge salaries that we cannot afford. But I'm looking to get maybe analysts from UK. And what we spoke last week, you guys told me we're talking about 3 to 5K salary per month, which is completely doable. If we unite and we go together to brokers and we get the affiliation fee instead of somebody getting it on YouTube. Let me just explain you how it works, okay? When you open an account with a broker, whoever sent you to that broker has a tracking number, and they get paid for sending you to that broker. So if I want to send Gert right now to a broker, so I will send Gert to a broker, the broker will give me a fee for sending Gert to a broker. And when I understood how it works, and it usually works with shady ways, like come, I'll give you an education lessons, or I don't know, landing pages showing you come trade crypto and become a billionaire overnight, Lamborghini, and I don't know, all that bullshit. So they get the fee, and I'm like, okay, so we are the real traders. They're getting the fee on us, whether we're talking about a completely legit platform or not. I'm not discussing any kind of scam here. I'm just saying that they're getting the fee for referring us. So why would they get the fee if we can keep the fee and use that fee in order to support us to get us the tools? So on one hand, what we're going to get is we go in bulk to a broker. We give him our conditions. We want pre-market, we want aftermarket, entry orders. We want any kind of penny stock that is hard to find. So we need to find somebody with, like I said, on AAA, somebody that is a liquidity provider. So we get that. I explained that before to whoever was here. The second thing is we will be able to get the fee, and the fee can be good. The fee can be high. Just an example, eToro, it can be a fee of 150 or 300. It depends on the country and the age. I don't know. But they have all these kind of fees, a referral fee, affiliation. So we can keep the fee and hire analysts to work for us and do us stock analysis, along with knowledge that they have that we can never have because they're there. They have access to that, and they have the connections. It's not just about analyzing a stock and understanding the company, or understanding who the CEO is, or understanding the P ratio, or understanding the earnings. No, there's a lot that's going on beyond. Okay, if you look at the stock, always when there's good news, we are the second or the third to enter the trade after the celebration of the stock already started. So we're missing out all the time. So if we can get these kind of people to work for us, it's not going to be cheap, but it's not going to be crazy expensive like I thought it was. And we have in-depth market charting that I can get us, etc. Now the playing fields are leveled. Now we can play. Now I can actually play and not be on a defense. You know, there's a very, 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 very famous sentence. If you know the sentence, the trend is your friend. So the trend is always your friend. Why you say the trend is your friend? Because the institutions determine the trend. We don't determine the trend. The big boys in Wall Street determine the trend. So if something is going up, it's going up because, you know, they have the ability to make it go up in a way. So they say the trend is your friend. You don't go against the whales, you follow the whales. All right. If you go fishing, you follow the whales, you don't go against the whales. If we can level up the playing field, maybe we can, you know, I'm not saying go against the whales, but at least swim as fast as the whales swim. I don't know. All right, it's 8:04. I can start. So if everybody's here, we can start the webinar. I'm Leroy. Nice to meet you. I will start by saying I'm not any kind of analyst. I'm not certified in any kind of way. I've been trading and working in the industry for several years. I started somewhere around 2012. I think it was October or something like that. Along the way, I trained a couple of brokerage firms about trading and about how to speak to clients and get your message across. I did a lot of interesting things, but my main income, if not my entire income, is the market. And I will say that it comes in waves. There are months that I lose. There's no gaining. There are months that I lose. There are months that I make money. You only need to make sure that the months that you are making money are bigger than the months that you're losing. So it's X3 on your money on the months that you win versus X1 to X1.5 on a month that you lose. Okay, and that's how you stay above the water and you make profits. I am not going to turn anyone here into a billionaire. I'm not going to turn you into a millionaire, billionaire, or whatever. I'm not going to buy you Rolex and you're not going to drive a Lamborghini by the end of 2021. If you are, good for you. I'm jealous, but that's not why I'm here. And I don't like Lamborghinis. I'm here because I think the market, like I said yesterday in the group, has $5.2 trillion changing hands every day. $5.2 trillion. Just understand how many zeros are there. That's including the Forex, of course, the currency pairs that are moving between banks. And if we are strong enough and smart enough and quick enough, we can get our hands on 0.00001 out of that, and we live happily ever after. But it's perseverance. It's waking up and doing the same thing every day. There's no guarantees. Market is dangerous. You don't swim in the ocean where you have a black flag. So right now the market is crazy dangerous. I really think it's not the right time to start trading for newbies as to jump in because of GME and AMC. We saw a lot of people getting hit. I think I met only people that got hit, but all right. But that's why I'm doing this webinar, because you guys are jumping in deep water in the most inflated market I have seen. Again, I'm not an analyst. I'm sure there were worse times than this, but for me, this is one of the worst markets I've ever seen to trade on. It's huge. It's crazy dangerous. So we need to establish the basics. So welcome to the basics. Boom. We are the Traders Union. Let's do it. We're going to talk about trading view basics. We're going to talk about support and resistance, Fibonacci retracement, POC, point of control, 304 bar plays, basic understanding of volume, how to look at it, SMA and EMA, simple moving average and exponential moving average, gaps in the market. Gaps are mainly relevant for stock trading, RSI and stochastic, and candles and important indicators. I'm not any kind of professional teacher. Again, I'm a trader and I'm not a guy who likes to be in front of the camera, so I'll try to be cool with it. Could you at some point explain the phenomenon of GME and AMC? Well, it started with a short squeeze. The person in charge of it, Mr. Gill, is a licensed broker, and he saw an opportunity, and he was talking about the opportunity for several months. We're not going to go into that right now, but when there's a short interest, there is a possibility to make a lot of money once you beat the short, and they saw that and they united and started doing that. From there, it became a social media trend, like everything these days, which is better than seeing people take pictures of their food and uploading it to Instagram. But still, I don't think that was the right thing to do, because that's not how you're supposed to enter the market. Definitely not come and put 10K on GME or AMC without understanding the balance sheets or understanding that these companies were supposedly going under, and that's why the short interest was so big. The only thing that is important to understand from this whole story is that Wall Street was playing a very dangerous game that I think is going to end now. You're not supposed to be able to short a stock more than 100% value of the stock, and everybody knows it was 130. So that's why they were playing that game, because when you're playing 130% short on a stock, if you beat the short, your upside room is huge. Okay, let's start talking about more relevant stuff. Whoever is on AME and AMC on GME, you can contact us. We'll try to help you out to get out of it in any kind of way. Again, no guarantees. I'm not a magician. I can just try and help you out, average out your money, but there will be a loss involved. But there was good things happening behind it. We united, and it's good. I'm not any kind of poker player, but I wanted to use this analysis, this example, because this will stay in your head. When you're trading stocks, and I'm talking stocks only for now, okay? We start with sentiment. Sentiment is the ace. It's the highest card in the pack, okay? In the deck. Sentiment, you can check on Google Trends. You can check on social media. You can check on media in general. And you can check on volume peaks. So pre-market volume peaks will tell you where the sentiment is. Super, super simple, okay? You go and you check scanners, scanners, and you find volume peaks. That volume peak tells you there's sentiment there. And then you take that stock and you search it, and you will find that there's something going on. If you don't find anything, then, and I'm not talking about the last 2 weeks. The last 2 weeks are not an indication for a market. This became a casino. I'm talking about regular market. So you will find a volume peak. You will go to the news, and if you don't find any kind of news, then just understand that it didn't come out yet, but there are news behind it or something going on behind it. So sentiment is the highest level. It's the beginning. This is where you start from on stocks. Sentiment is the first layer. We start with sentiment, and then we move to fundamentals. Sentiment will win fundamentals, and sentiment is obviously going to be much stronger than technicals when you're trading stocks. I'm not talking Forex. Forex, you can combine fundamentals and sentiment, but a lot of times there's nothing there, so you just go to technicals. And if you could see all the scam going on over the world of Forex, making 100 pips an hour and blah blah, they're doing it on technicals because yeah, you start with technicals on Forex, but we're trading stocks. So fundamental means research, like we did today on Takeoff, on Drone Delivery Canada. That's fundamentals. We dive in. And we dive in, head in, all the way in to understand what the hell's going on. And we break it apart. Now, I want you to understand something. You like a stock, that's great. When you analyze a stock, hate the stock. You have to hate the stock. You have to find what's wrong with the stock. And that's where you want to find your analysis. Because people come, oh, wow, look, I don't know, I'm going to give the stupidest example. Apple's coming out with new augmented reality glasses. Okay, but what's wrong with it? When you start with what's wrong with it, you will be able to see the real value of the stock. So I started with what's wrong with DDC, Drone Delivery Canada, yeah, DDC. And I started by saying, first of all, they don't have any kind of investor presentation, which is fishy. Why would a company that is IPO'd in the market not have a presentation to lure clients in? Everybody's pitching you. Okay, everybody's pitching you. That's their job. The CEO goes on CNBC to pitch you. Okay, Kramer will go on his Mad Money show to pitch you. Everybody will try to pitch you and move you to do what they want with your money. That's obvious to all of us, right? So the investor presentation is part of their pitch. So I'm like, why don't I have a pitch here? Which is the first thing I wrote. And then I saw that the strategic engineer didn't look good to me at all. I mean, he didn't have enough experience in my eyes to do what he's doing. But, you know, so I start with the negatives and then I go to the positive and I try to find, I don't want to sound like ARK because it kind of does sound like ARK, but I try to find something that if this comes out, people will need to pull their money out from somewhere else to put here, okay? Because this is going to bother them. That's what I want to see in a stock. So if DDC comes out with their drone technology and let's say everything is perfect and they get the contract and it works, people will pull out their money from other delivery systems or other delivery companies in order to put it there because they know that this is a threat. And what happens when people pull out the money from there and put it here? That goes bad, but this goes good. And that's what I'm looking to find usually when I'm looking at stocks. I want elbows. I want to get elbows. I want to get people move away. I am here now and my technology is going to hurt your technology. So ARK will say innovative technology, disruptive technology. Yeah, correct, completely correct. But I want to see the money being pulled out from one place to another place. And that's why I would like the stock. Okay, and I'll start with the negative, like I said. So research, breaking news, balance sheets, earnings, net income, PE ratio, yada, yada, all the dry stuff. They are important. I don't know. Today, they're not. Today, they're not important. Today, we're trading, I don't know what we're trading. We're trading a meme market or whatever you guys call it. But so it's kind of hard to tackle today. What's going on right now? They're looking for low float stocks. So basically, you can move the stock price easy. And that's completely different than what we used to look on the market. But imagine this. If I give you something that never happened before, you cannot analyze it and assess it. You can't give me an estimate of how much it's going to be worth because it never happened before. So if something never happened before, how can you tell me what's the stock price? You can't tell me what the stock price is. It never happened before, right? So one of the SEC laws says you have to say whatever happened in the past is not an implication of what's going to happen in the future. It's a disclaimer you have to say. So here we don't have a past. So if right now Weibo is coming out with autonomous taxis that are being tested in China, this never happened before, right? So I know Uber is going to get hit. For example, if they go states and they get main attention. But I know Uber is going to hit. I know that the retail taxi drivers are going to get hit, etc. But I can't tell you how much money that's going to make. I can estimate that by 20, 30% of it, but I cannot tell you how much money it's going to make. So what does that give me? That's a huge plus. That means that the stock can fly without a roof, unlimited. That's where I want to be. And that's why I like innovative technology, because you cannot put a price on it. All right. So net income, earnings, etc. The dry details, but research. We are right now in the best market. I'm again, without the meme stock part, but we're in the best market ever because we have a lot of things coming together in the same time. I wrote it yesterday in the group, I think. So you got genome editing that is going with AI. And I don't know why ARC is not talking about it or anybody not saying it, but this needs to be said. So if I'm taking genome editing and I'm taking artificial intelligence and I'm taking robotics, okay, this is a good company, this is a good company, this is good, but yeah, but what about the fact that they're all going together? This is using this in order to reach this, and this is using this in order to reach this. There is a company called PSTG, Pure Storage. They're using flash-based data storage. So it's not cloud data. It's flash-based, meaning that it's on the hardware. That is being used for genome editing, okay, to store all the data of genome editing. So we got two companies breaking out technologies that are combining together perfectly. So this market is the most interesting market I've ever seen in my life. It's phenomenal because we have so many innovative technologies that are fitting together like a glove to each other. And if this one goes up, it will affect this one that will go up as well. So that's great. That's why I'm very excited about this market. So you want to do that. Back to the point, Leroy. Technical is the last part. So we had sentiment, then fundamental, then technical, charting and volume analysis. Technical is in order to optimize my entry. Optimize my entry. Technical in stocks is not in order to choose what to trade on. To be clear, again and again, I'm not going to choose the stock I'm going to trade on because I see it. Oh, I got a 30% dip on the stock. There's a reason that the stock went down 30%, dude. There's a reason. And yes, there will be a correction, but the true direction of the stock was 30% down. That means that after the correction, hence the name correction, it's going to keep dropping. So we don't want to touch that stock unless we know what happened and we can justify that it's overreaction. So if a stock dumped 30% of its price, maybe the investors overreacted. Spotify last week, stock went down from 360 in its highs, was the highest 360, dumped to 310 and then dumped to 38. Spotify is insane company, insane growth. User growth is more important than revenue. User growth is more important than revenue. You have to understand that user growth will give you revenue. Who cares about the revenue right now when you have the user growth? The revenue will cover itself when you're growing. So Spotify was dumped by investors on bad earnings. Whatever, the user growth was good. So I bought a lot of it, and I believe, no guarantees, but next week we'll see. Take the example of Clove. Yeah, definitely. Clover Health, same thing. Clover Health is coming with artificial intelligence in order to solve health solutions by diagnosing. That's why I added up on spot. By diagnosing diseases by going to the cloud and using all the data it has to cross-figure what's going on in the patient's health. And that's how you can get much more accurate results, etc. So Clover Health is going to be huge, period. Clover Health or somebody doing what Clover Health is doing. Maybe Clover Health will suck because the CEO is not good or because the management of the funds is not, I don't know. But I'm saying the technology is insane. So I will choose the stock upon my fundamental, my sentiment first, fundamental second, and then technical. And the technical will optimize my entry. Wow, I love this. I love Clove. I want to go and buy Clove. Okay, hold on. Don't FOMO yourself in. Fear of missing out. Don't FOMO yourself in. Analyze the stock, understand what's your best entry in order to optimize your profits. And that's why we're doing technical analysis on stocks. Along with that, I'm going to say a little disclaimer. I do CFDs, and when I see big opportunities that are easy, for example, spot on 308 on a CFD, hell yeah, I'll buy it. I got a leverage of 1 to 5 on a stock. CFD, to whoever doesn't know, because I see somebody asked me here, it's contract for difference. I'm not buying the stock. I am betting, from a lack of a better word, betting on the value of the stock, where it's going to go up or it's going to go down. Okay, so I see Spotify 308. I know the highest is 360. I know there's a user growth. I know that I have huge potential. I go in on a buy position on Spotify. All I want to steal is $5. I don't want to go all the way to 360. I'm not a greedy person because I have a leverage of 1 to 5. That means every movement of the dollar gives me $5. So if I go and I buy right now 100 shares on Spotify, 308, and I exit at 315, I make nice money. If I bought 2,000 shares, I just paid rent in 20 minutes. Okay, so CFDs are leveraged products. That's where I will optimize my entry and trade only technicals. That's the opportunity to ask you to add the CFD. Whatever you guys want on AAA, whatever you guys want, I will get you. I call them every morning. They're sick of me by now. Except HCMC. They can't find HCMC. That's the only stock I couldn't find for you. CFD trading is much more riskier. Yes. Yes. It's not much more riskier. It's hell more riskier. It's super more riskier. I can't find the right word. But yes, you've got enough to do. You have to understand, I go in on a CFD trade usually. I say usually because I make mistakes always. Always. I make mistakes also, just like every other trader. But I go on CFD trades that are easy to read. Okay, when in November, I think it was me and Paolo, we were celebrating the gas. We were trading the gas. Gas dropped to very low levels. Simple trades. Simple trades. I'm not looking to put 1,000 lines on the graph and try to understand periodic movements. No, parabolic. No, simple trades. Weibo at I went in at 285. Yeah, exactly. He's writing to that AAA is sick of me. I know. So I go in on CFD trades that are very, very, very simple trades just to make some bucks, a couple of bucks on the way. But the real money will come from stocks. I'll move on because we don't have much time. How do I move on? Okay, so we're going to jump into charts. I'm not a guy who shows PowerPoints. I just wanted to make sure we cover everything. So we're going to talk right now about candle colors as a beginning, etc. Okay, let's switch to the more interesting things. So this is how you will see TradingView if you're using it the first time. Whoever wasn't here, I was explaining. I don't use colors. I trade black and white. Okay, the brain sees what the brain wants to see. Right now, I want to do a buy position. I will see much more green that actually happens on the screen because my brain wants to see a buy position. Okay, did you ever have this that you want to go in a buy position and suddenly, oh, it looks perfect for a buy position. But then you're like, wait, maybe I don't want to do a buy position. I want to do a sell position. Oh, it looks great for a sell position. So what we do is we switch the colors, right click on the screen. Again, this is a very basic webinar. I told you, I warned you. We switch the colors on the screen by right click on the chart. I switch the body to black. Sorry, green is white. Red is black. Green is white, red is black. Why am I putting black here too? Because this is the outline, okay, the border, as they call it. And the wick, also black and black, because I want to see the wicks. They're very important. We'll talk about wicks today. Sorry, black and black. And this is how I want to see it. Black and white, non-bias. My brain can't play a game. Okay, non-bias. Now, it is something I learned a long time ago from, I said this before, from a very, very experienced trader. And I was laughing at him at first, but this is very important. No jokes, very important. Work with black and white. You will see that you will see less buying opportunities when you're doing black and white. Okay, so this is the first thing I'm gonna do. I will change the colors. We're talking about charting, yeah? We're talking about charting. Guys, if you have questions, because I'm a guy who speaks very fast. I'm not a teacher. I'm a trader. I think fast. I work fast. So if you have questions, I have the chat in front of me. Just shoot or talk. Okay, this is for you guys. Everything we're doing here is for you guys. All right, so the first thing I did is I changed the colors of the candles. Second thing I will do is I will add the volume. Now, the volume that I have is called volume profile. You have to have premium or a pro membership or something like that on TradingView. You can live without it. There is another kind of volume. I'll show you the difference in a second. So you're looking for volume, regular, no other words, just volume. You click on it and you get the volume. Now, let me see here. Okay, you can also customize this to black and white. I believe everything should be black and white in life, so gray and black. Trading is not supposed to be full of animation and cool gimmicks. It's supposed to be dry. This is financial stuff. That's how it is, and that's how you make money. All right, so this is the volume. I have non-biased opinion here because there's no colors. This volume is not great. By the way, one more thing about this volume, you can add a moving average of the volume. So it takes the number of the volume calculated, I think times 9. I need to check here because I don't know what TradingView does. But you get this line, and this line is a moving average. Whoever doesn't know what that is, we will cover it in a minute. And that moving average shows me if the volume is higher than the average expected volume or lower. So if you guys can see my mouth, here the volume is lower than the average volume that's supposed to be. Here the volume is higher than the average is supposed to be. Basic stuff, right? All right, so I added the volume. This volume is telling me by time, okay? In this time, on the 26th of January, 2:30, UK time, I believe, on my charts, the volume was higher than the moving average. The volume that I use is profile volume profile. You have several here. So I usually use visible range. Visible range means you're going to get the volume from all the visible candles on the screen, okay? So all these candles together, the most bought and sold price, the key price, the POC was here. I can't see the numbers because, okay, one second. Okay, so this is an Apple chart, by the way. I said I'm going to make it boring on purpose. So the volume is 134.84 if I'm looking at a 1 hour chart that started on the date of the 11th of January. If I move the candles to eliminate those dates, the POC will move. It will change. Or it's supposed to change. Here we go. You see how it moved? One second. The POC will move its price. You saw now I'm in 122. And if I go back, I'll be in 134, 127, 131. Now, POC is a bit more advanced, but let's make it very simple. The red line is where the highest interest is. When you have full colors, that means that that volume is accumulated in a way. That area has been sold and bought a lot. Okay, that area was covered with a lot of buying and selling. The area that is half see-through is an area that has not been covered enough. The volume, the price will be attracted to the red line. It's a magnet, if I'm speaking in lame terms, okay? So the red line will attract the candle. Once the candle touches the red line, it will continue its true direction. And if you saw today on the chart, quickly, I'll do it. And that's why I was so impressed by takeoff. Okay, the volume, the POC from 14th of January until today is sitting on 1.3885. Again, it will move a little bit as much as I play with it, you see? It's moving 1.44, 1.48. But the POC usually will be very low. See, this is where it's supposed to be, because I'm saying, listen, I'm looking at a chart of a month. You want to tell me that the price a month ago was higher than the price that it is now as in volume? The answer is yes. Why? Because there were much more interest in the stock at that price. That means that something happened in the company that made the price go up. And a lot of people were interested in buying the stock at that price. So supply and demand, people. That means that the supply and the demand on this price is reasonable, which tells me that the stock has more move up. Because if I can, let's turn it into a simple example. If I can buy a milk in $1 and everybody agrees to pay for milk in $1, I'm going to try and sell the milk in $1.10. And I see that everybody agrees to buy the milk in $1.10. I will try to sell the milk in $1.20. That's my profit margin, right? I want to increase my profit margin. And if people agree to pay that price, I will keep raising the price. So Takeoff agrees to get 1.43 in this example. If I move it to the realistic, I want to see the part that I'm interested in, which is this one, because I don't want to know what's happened before. At the moment, I want to know what's going on right now. on a 1 hour chart. So I'm going to put it here. And I see that there was a lot of volume at 1444. So I have more room up. Simple. You don't need to be a scientist. All the people that are charting with a billion lines, relax. We don't need that. We just overcomplicating simple stuff. Supply and demand. People will pay a price that they believe in. And if they pay a higher price than the price it is now, that means you can have more money on it. You can make money on it. Okay, I'm going to delete the POC because I want to keep it simple. So I got a black and white chart. And I emphasized a couple of things here so we can talk about them. But I added the volume. You guys don't need, somebody asked here, no, you don't need to pay TradingView right now. I think it's way too early. If you're trading for a long time, sure, you can fork out 100 or 200 euros or whatever it costs. But don't start with it in the beginning. You know, I paid for things only after I really had to use them many times, and I got like, okay, fine, I'll pay. You know, you break mentally, you pay. But the whole point of trading for these tools is to take money from you, and the broker will want to take money from you, and Wall Street want to take money from you. And so try to minimize how much money you fork out there before you establish that you are a professional trader and you're making profits. Until then, minimize the expenses, because maybe it's not for you, maybe it is, maybe the learning curve will be longer. It's under volume profile, and it's called visible range. Okay, visible range gives you a volume on the whole chart. You can also do fixed range or session volume. For example, session volume will give you the POC on each candle. Okay, you guys see I added, well, John, John is asking, should the stock, you can see the questions, no? He's asking, should the stock price be based on a percentage of earning? I explained it before. If we're talking about innovation and technology that is disruptive, you cannot evaluate something that never happened before. So if we have robo-taxis in China that never existed before, we cannot tell you how much the earnings, how much the value of the stock will be. We can tell you how much the sector of taxis earn in China, but where will they take it with robo-taxis? You cannot know. And maybe it's going to be more expensive because it's robo-taxis. So if you're looking at innovation and disruptive technology, it's beautiful because you have no roof, no limit to the amount of value the stock will have. Again, I'm saying that without people getting carried away and overbuying stocks at $100 because they have something to do with fuel cells or electronic vehicles. Anyway, this is a session volume. So you see the red lines. That's the POC. That's the most wanted price in that period of time. That period of time here is 4 hours. Okay. So in that session, I'm sorry, it's 1 day. I'm sorry. In that 1 day, the most wanted price, for example, was 139. All right. But again, this is next level. Let's focus on basics. All right. So that was called visible range on volume profile. Yeah. Okay, so RSI and stochastic is the second thing I'll do. Again, first thing, we change the colors, we fix the candles to be non-biased, we add the volume, RSI and stochastic. Let's speed it up because I'm really behind, talking for 35 minutes. I go to indicators. RSI stands for Relative Strength Index. I already have it here, so now you're gonna see a double. And stochastic, they kind of do the same. To be honest with you guys, I use RSI or stochastic. I really don't mind which one it is. It's the same function. They're both basically the same kind of indicators. They're both momentum indicators. That means they're lagging. Okay, they're lagging. I actually had to reread about this because it's been such a long time since I used the terms. You don't use these terms anymore. It's textbook terms, but it's called momentum indicators. They're lagging in their movement. So the price will move and then they will move, or the price will take an action and then they will show you the action. The point of these indicators is simple. I want to see when the price is overbought or oversold. We all know that. But I also want to use it in order to see the moving average of the price. So I'll show you what I mean. It's a bit more complicated to explain. It's not complicated to understand, it's just complicated to explain. So you're looking at a chart. I'm going to switch to 4 hours. What you want to see is you want to see that here, for example, the stock was overbought, right? It's above the 80 line. This is a stochastic. It's above the 80 line, so it's overbought. Below the 20 line, it's oversold. By the way, one word. We have all of this in our website, and we wrote it in the simplest, dumbest language ever. So you don't need to break your head to understand. So you just go to our website. Everything is free, no catch, okay? You go to our website, you click on encyclopedia, and you have it right here. We explain you every possible thing you can do with RSI. All right, it's on our website, and we're paying writers to take what we tell them on the phone and to write it. So use it, okay? And you have every image explaining exactly how they work. Use our website, please. We're working for you guys to have everything. You have here a bearish divergence. If you guys used it, it's an amazing strategy on RSI. So bearish divergence means that the RSI is showing you a downtrend while the action is actually showing you an uptrend, okay? Which will show us that the asset is going to drop. This is a very strong strategy. RSI is showing me a downtrend, okay? Price is showing me an uptrend, which tells me that the price is not really where it's supposed to be. It's inflated. So correction or sell-off or a drop, whatever you want to call it, is coming. Same thing, but opposite. You have bullish divergence, etc. Okay, so you see, you have everything in our website. You also have bullish swings. This is bullish swing. I'm not going to go into that stuff right now because it's a bit more complicated and this will just give you a headache. But you have a lot of strategies you can use for RSI and stochastic. It's all there. Use our website. All right. I think I said it enough. Okay. So in the chart, we have an overbought and oversold situation that can help us understand when the market is dipping. We are looking. You guys are telling me, I want to buy the dip. I want to buy the dip. And I keep repeating the same thing. We want to see the asset dropping 5% minimum to say we want to buy the dip. Don't buy a dip of 1%. That's not interesting. We want to see an oversold situation. So the asset is completely oversold. This is Apple. It's a pretty stable stock. So, you know, it's a lot of convergence, meaning the movement is very stable. This is a very healthy trend. Apple works very healthy. So it will go up $2 and it will correct $1. It will accumulate and then it will go up again $2. That means it's a very stable stock, very healthy trend. We all know Apple, of course. So you want to look for oversold situations with a dip of 5% along with volume peaks of sell-offs. And then you know you can buy the dip. RSI is stochastic overbought. Okay, so that was the third thing I'm putting on the chart. Oh, you guys are writing. I'm sorry. The chat keeps disappearing. What those letter E and D, red and blue? Earning. Ah, you mean this? This is the earning. This is dividends. And you can remove it from the chart. So this means earnings. This means dividends. Okay. All right. Now, the next thing we will want to do is we want to play with the hours. Now, check this out. Check this out. Everything I'm saying, I just went to our premium validator. Again, I'm not trying to give you any kind of commercial to my website. I don't care if you visit it or not. I'm not getting paid for it. I just want you to understand we have it there and I used to use it. So use it. It's free. It's freaking free. Who else will give you free stuff? Anyway, if you have time and if you trade AME yesterday, could you explain, did you find what? With all due respect, Mike, we're doing basics. AME was a pump and dump play. If you want to get to a level where you're doing a pump and dump and you don't lose money, because usually people that are trading pump and dump without understanding what they do, they're going to left holding the bag. We're going to get to that, but you need to cover the basics. Okay, you don't build a whole house before you understand how to put the cement in the ground, right? Something like that. So it's all here. We have a premium validator, and here you have all these questions that will help you understand how to look at the chart. So okay, so we did the RSI, overbought, oversold. They're going to ask you that in the premium validator right here, if the RSI is overbought, oversold. And somewhere here, you have 30 questions. Answer those questions and you will get an answer. When you get the answer, it will tell you strong buy or strong sell or hold and high breakout possibilities. These are all basic questions that will determine for you by calculating. There's an algorithm behind it that calculates. It gives certain amount of points for each thing that is more important. And then you get an answer if it's a buy or sell or strong buy or strong sell or hold. and if it has a high breakout probability. If you have a high breakout probability, that means higher risk. It's not a good thing. It's not a compliment. You're trading a high risk. Be careful. Again, I have a lot of people here looking to make 40% a day on a meme stock. I'm talking regular trading. Okay, cool. And next thing we're going to do is we're going to play with the hours. So we're going to start with a 4-hour chart. If you want to enter a stock trade and you want to optimize your entry, as we said before, we start with a 4-hour chart and we dive into a 1-hour chart and we end with a 15 chart. If I'm trading CFDs, I will also go 5-minute chart, but that's just because CFDs, every single penny matters. But on a stock, we start with 4 hours. What I would do here, let's start talking about more important things. Pay attention now. What I would do here is I'm going to find the support levels and retracement levels. How? Pivot points. Okay, so I want to see as many candles touching that line as possible. I don't care. I see a lot of times on the internet, YouTube, blah, blah, blah. You need to put the resistance support on the highest point of the wick and it has to touch only here. No, it's not correct. What is resistance support? Resistance means a price that was hard to break. That's what it means. It's not a line. It's not supposed to look good. It's supposed to say this price was not wanted. The milk at $1.20 is too expensive for me. So every time the milk will be $1.20, I will go out of your store and look for the milk in a different store. That's what it means. So you want the resistance and support level to be where people struggle to pass. So when I put a level, I will try to put it, first of all, where it's touching the most candles. Touching the most candles. Then I will double click the level and I will round the number up. I said every person that is in the group for a while, not in the last month or so, knows this stuff because I keep repeating them. I want round numbers. Why? Many reasons. First of all, if I'm a trader and I put a limit order, I bought Apple at 127 and I want to exit Apple, I'm not going to exit Apple at 129.59 because humans don't work like that. I'm going to exit Apple at 129 or 130, right? Or 129.5. That's how usually we think. That's first of all. Second of all, trading bots. There's a lot of trading bots out there. Trading bots that trade billions of dollars a day. And they also work in round numbers, as far as I know. And as much as I see, they work in round numbers. So I will always try to look for the most closest round number or half round number and put the line there. So I got 127 here. I got 120 here. I got 114 or 113.50. I will see what works for me better. How do I see what works for me better? Not what looks better. What touches more candles? Where the candles are sitting more? Again, yes, it's basic, I know. So round numbers are important. Once I am in a 4-hour chart and I put those round numbers on support resistance, here we're missing one here, I think. Okay. So I want to touch this one and I want to touch this one. I don't care. This is a test. The price is meant to be tested. Yes, I'm going through the candle, I know, but it's a test because I tested my clients on $1.20 on milk and some of them bought, but most of them left. So this is the sum of them that bought. This is called testing the resistance. There will be a little bit of fake outs always, but I wanted to touch as many candles as possible, okay? So I'm gonna put it on 137 and this will be my resistance level. Is it the number? No, it's an area. It can be 137.10, 137.20, or 136.90. It's this whole area. This whole area was hard for people to buy. That's what it means. People don't agree to pay $1.20 for a milk or 125 or 119. It doesn't matter. This price was too high. I need to go back to $1.10. That's what it means. So this whole area was hard for them to break. So you will see that professional people usually put squares, not lines. Okay, they will put it like this. And this whole area is a resistance level. It's not a number. It's an area. Okay. Cool. Question. Yeah, 1 second. How are you adding line? Here, I click here. You mean in the trading view? I click here and I click where I want to put it. And then you have that square here. You double click it and you get the settings. And you can change the coordinates. You can change the color. You can change the text. You can add text and say resistance, for for example. You see here. If I got your, James, if I got your question wrong, then let me know. Missed you clicking on the left. Sorry. Okay. So I put all the resistance level and support levels that I see on a 4-hour chart. Why? Because then I'm going to dive into a 1-hour chart. So my chart will look like this. It will have a lot of dotted lines on purpose, not too many colors, because my eye will get attracted to colors. So I use gray. I use dotted line. Okay. And I just put it here. Now, I'm not going to see all of that because I'm going to dive into a 1-hour chart. Most of them will disappear because it's out of the range. Okay. I must say, I'm going to short the hell out of Zoom because this is not a good software to work with. Just an FYI. Okay. So I have the resistance level and support levels that I saw on the 4-hour chart. And now on the 1-hour chart, they will not necessarily touch all the candles, but it's fine because in the broader scheme of things, that's the resistance and support level. Okay. Just make sure it's a round number, James. Make sure it's a round number. I don't want 136. I want 137. Sorry, I thought it was 136. Okay. Now, if I go again to a 15-minute chart, it's going to look completely different. But you will notice that if you're doing it right, you will have a lot of landing points. I call this landing points where the graph is leaning on the level. The graph is leaning on the level, leaning on the level. Okay. So this is my support and resistance. And support and resistance are meant to be tested. So this will be tested numerous times before it's breaking out. How do I know it's breaking out? If the candle is here, no. I need a completion of 2 to 3 candles above the price and simultaneously not be overbought. So this candle breaks out here. Let's look at this one. Okay, this is like a tweezer bottom. I'll show you in a minute what a tweezer bottom is, but it broke it back up. This was a test. It tested the support level and people were like, oh, it's too cheap. They brought it back up and now it's leaning on the support level again. You see leaning here, leaning here, leaning here, and then it moved on because that area needed to be tested. But this was oversold, which means to me that it's going to go back up. And I'm sure 100% that if I put right now the volume, I will see that the POC is higher than this level, which means that people think that this level is very easy to pass. So along with the dip here, maybe I'm speaking too fast. Along with the dip here, this is the line. I'll do the line in red. I'm sorry if I speak too fast, guys. The asset dropped below the price. It was oversold. POC was higher. And it was tested. And people were like, oh, this is a steal. Apple at 130. Oh, let's buy it. And it jumped back up. So everything told me it's going to jump back up, which turns this whole thing into a fake out. It's called a fake out when a trend is trying to break support or resistance, but it goes right back in. That's a fake out, the opposite of a breakout, right? These are very lame terms of Forex that everybody probably knows from Instagram and all that shit. So the asset went back up and it's testing this level right now, 136. So this is a 15-minute chart. If I go to a 1-hour chart, I will see, first of all, that this whole area was easy to pass. So the graph, the asset, the price, whatever you want to call it, flew right through it and had to correct all the way down because that area needed to be tested. Again, accumulated with orders because here somebody bought a lot of Apple and it didn't give the market a chance to test that price. So somebody went into the store and just bought 1,000 carts of milk at one go. So if I will look at my earnings of my store, I will see that milk is going at 1.2 very easily, but that's not true. It's just one person buying a lot of bulk or a market hype. Something happened. Your milk is extra good. I don't know. Your cow is the best cow in the world. I don't know. Okay, bad example, but whatever. So the price will fly up. But then they say, wait. This is a regular milk. Now he's paying 110. Why am I paying 120? And when I say he's paying 110, I mean there's a lot of pending orders on less price, and there's a lot of market orders done on less price. So the market will need to correct and retest that area. Okay, so and that's also important to keep an eye on. So I will drill down from a 4-hour to a 1-hour, to a 15-minute, again, just in order to optimize my entry, not in order to decide if I want to buy or sell. I decided already that I want to buy Apple when I did this, right? When I did my sentiment and my fundamental, and this gave me a big green check mark. Volume is spiking up. I don't know. Google Trend is showing me a positive thing. Google Trend is it's a new thing I'm using in the last 6 months. It really helps to know if a new stock that is not known. Don't do it on Apple stock, obviously, but on stocks that are not known, you can find the hype. Okay, this is retail hype. This is not institutional hype. Institutional hype you can find somewhere else. Sometimes you can find it in Insider Mindkey or other sources I can post in the group. So I got a green check mark on this. I got a green check mark on this. I decided I want to optimize my entry. I will go and I will start laying out the chart, right? I put the candle colors, the volume, the RSI, and I drill for 4 hours. Here I'll put resistance and support level, drill to 1 hour. If I find another resistance support level I missed in the 4 hours, I will add it there. And then I will drill to a 15 minutes and wait for the best entry. And that's how I will get Apple in $126 instead of $128. I don't care if Apple is flying today. The point is, Apple is flying, but it's going to retest that area again. So wait, count to 10, hold on. Apple's flying to 130. Oh, I'm missing out. It's going to go to 150. Okay. But it's also going to go to 126 later. So you're going to have another chance. So wait. Pivot levels, I explained, this is the round numbers or half round numbers. The lower the price of the stock is, the more round the number is. Okay, if I'm trading a stock that is valued, I'm trading till rate. What is till rate? 18. I will look for round numbers. If I'm trading a stock that is Amazon, I will look for round numbers of Amazon, which are different than till rate. Till rate will be $1 for round numbers. Amazon will be $100 for round numbers and $50 for round numbers. So it depends on the price. The higher the price, the different the round numbers are. But you don't put support and resistance on on non-round numbers, okay? On unequal numbers. Okay, then we search for clues. This is where it gets fun. Okay, so what is clues? Clues is technical analysis. Clues are charting patterns. I got a problem. It's a personal problem that I have. The market's so full of scam and so full of BS that when I talk about charting patterns, I feel like a kid posting on Instagram, look, I made $1 million by putting tweezer tops, tweezer bottom. This is the least important thing to look at. This is the least strongest analysis you can do. You will see a million charting patterns and the trend will still go against you. This is not something to lean on. This is when I drill down from sentiment to fundamental, to technical, to support levels, to volume, to RSI, and everything matches. Okay, now I want to see some kind of a bottoming tail, inverse hammer, tweezer tops, whatever. But this is the last thing. Don't be looking for a bottoming tail and say, oh, I got to buy this stock. It have a bottoming tail. I don't care. So it will give you one green candle and crash back down because you didn't check the fundamental of the sentiment. If nobody's buying the stock, it doesn't matter if you have a bottoming tail. The bottoming tail means that for that specific period of time, there was a struggle between the buys and the sells. Okay, but what's the value of the stock in the overall run? Not one candle. You can't look at one candle or two candles and tell me what's going to happen. That's bullshit. Whoever tells you that two candles can tell you the future of the stock is full of bullshit. I'm talking stocks, I'm not talking Forex. Can you give an example again? Different stock. Example of what, Anto? I did many things. Can you be more specific? Resistance levels? Let's take a different stock. Neo paid the rent. We have a code in the group because we can't say made money, you know, we're working regulated. So when I say it paid the rent, that means cha-ching. So Neo paid the rent several times. I think people know that. I hope people know that. All right. AMD. I will do Neo if you don't mind. AMD, by the way, is a bit more boring than Neo in the charting pattern. So I go 4 hours. It's okay if I keep the RSI, you know how to put the stochastic, you know how to put it, right? And I'm going to put the levels that I find fit. Now, you can also do daily or weekly if you really want to, if you're going long term. It depends on how long you're going. So if you want to buy Neo right now for 6 months, don't put 4 hours. Put weekly. This is NEO on a weekly chart. Simple, 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 simple. First of all, I have the support level here that I want to raise a little bit up, right? And I don't use red. It just was for the example. I usually use green. I want non-biased opinion on the chart. 1 second, I'm going to round it up. Don't worry, okay? Yeah, sorry. All right, and these are my levels. Believe it or not, I have templates saved for all the major indices, so I don't need to do it every time, obviously. And then you will see that something you did 6 months ago just got hit. Okay, check this out. I don't know if you guys can see this. You see the long wicks? Again, we don't look at 2 candles in order to tell the future, but long wicks are important. Long wicks, these kind of things are very important. Very important. This means FOMO, this means struggle. This is very, very important stuff. Okay, so when you see long wicks, look what happened there. This is a 3-bar play. Is it? I need to check the volume in order to tell you, because a 3-bar play has to have volume. It could be a 3-bar play if the volume matches. I'll explain what a 3-bar play is later. Let's say I'm done. Okay, I'm just going to round them up really quickly. We just don't have time. So NEO 50 here. 50 was a level. Notice how the levels are usually key numbers. So 38 doesn't work for me. Why it doesn't work for me? It's barely touching anything. So it's not 38, it's 39. You guys following me? If I put a number and it's not touching any candles, I'm wrong. It's also not 39. 1, 2, 3, I'm missing some candle. I want to touch this one as well. Let's try 39.50. Much better. So 39.50 to 40, that area had a battle, obviously, because it's a round number. People had pending orders to exit the trade on 40. They bought NEO on 30. They're like, oh, when NEO reaches 40, I'm getting the hell out. So everything got sold on 40. It's very simple to understand. Everything in the market is so simple to understand. It's just people overthink things. Okay. All right. So you see how when you go from weekly to daily, my support level kind of works nicely. All right. And this one, I didn't change them to round numbers because I'm rushing. I really want to teach you guys everything I can from the basics, but I don't have enough time. All right, so I'm going to dive into 4 hours. I'm seeing that it still works for me, and I love what I'm seeing. This is called a side trend channel, right? This whole area was channeling. Best trades on CFDs are channels. Best trades. Why? Because you can expect what's going to happen. Expect with quote unquote, yeah? So NEO was channeling between 50 to 40. And it was channeling from the drop that it gave us in 1st of December until 31st of December. So I could have made money from 1st of December till 31st of December by having a pending order buy on 39 and a pending order sell on, I would say 47, because you don't want to be greedy and the channel is not accurate science. Nothing is accurate science, but 47, 46, you can exit the trade and make money from that. Okay, let's move on. So you have another resistance level here that we missed. And this area, I will definitely do this. Why will I do this? Because I think this area needs to finish what it's doing, and then it will give me the next move up. But this area, it's not this area, I'm sorry, it's this area. And so this is what I would do, and then I would drill to 1 hour. Look at how I'm optimizing my entry. So I know that this whole area is a very interesting area because I have some sort of a potential side channel. And I will want to put another level here. Yeah, this is a test. You see this? This guy's testing it. So I got 58.35. I'm going to try 58.50. Does it work for me? It does. Now, another thing we didn't speak about, obviously, is Fibonacci retracement. Fibonacci retracement, just to make sure we know the basic, is a golden rule for math and physics and building structures. It's not just for trading the market. It's done for a lot of things. It's the golden numbers, golden ratio, if I'm remembering correctly. So I want to test Fibonacci retracement. Here I don't have some crazy move, so it's not so interesting, but let's say that I want to test it. So I'm going to stretch it from the bottom of the trend. This is not a good trend. This is not a good trend. No, I want some kind of a jump. Boom, that's very nice. So I'm going to test it from the, in this case, it's a downtrend, right? So I'm going to put my mouse from the bottom to top to the bottom. Now I'm going to make something very clear. I really don't care about anything else except these three numbers. If you go to a regular chart and it's the first time you're doing it, you're going to have a lot of levels. I don't care about the other levels. People care. I'm not saying that they're wrong. I'm just saying I don't care. I care about the 50, I care about the 61, and I care about the 38. The most I care about is 50 to 61. In an uptrend, sorry, in an uptrend, the most I care about is 50 to 61, because this area is the strongest area. And you see that massive drop, went back up, V-shaped style, touched the 50, got confirmation, touched the 50, continued the true direction. True direction was a drop, touched the 50, and went back down. Obviously, I didn't plan this. It just shows a random trend. And you can see it will always work. 50 is always gonna, 50 or 61, it will always work. 1 second, guys. Okay, so Fibonacci retracement. Let's choose something parabolic for Fibonacci just to show you the power of Fibonacci. Yeah, all right. So let's take something parabolic. AME. Let's take AME. You guys love the AME. That was a nice trade with a lot of money on it. So let's take AME. All right. So AME. You can see I had some shit ready here. Okay, so this was a massive crash because it's a pump and dump. And that's why I chose this example, because a pump and dump is not giving you regular market behavior and golden ratios will not usually react. If you look at GME, you will see that the rise was unlogical, of course, because we know what happened, but the drop was kind of technical because the drop dropped in levels. It gave us increments of, I think it was $30 increments. So the drop was very technical. The rise was pure fundamental move. There was no technical behind it, but when people dumped it, they dumped it on pending orders, on limits. So it gave us stairs, you know, it touched every resistance support level on the way, did a little bit of a side trend and dropped again, did a little bit of side trend and dropped again. So it's interesting to see that technical was working there. All right, so here we can see it completely past the 50 level because this was a pump and dump. And I'm going to take it from the beginning of the jump all the way to the end of the wick. It has to be to the end of the wick. You will hear people telling you, no, you need to put it on the candle. No, let's talk why. Forget the candles. Let's always think about the logic. This is human beings buying a stock and selling the stock. This price, people bought. It was there. People bought it. Okay, so if people bought it, that means we're going to pay attention to it because it was part of the equation. So why neglect it? Okay, and so you can see here the first wave. This is the first wave. It started from here, don't be mistaken. This is called a market gap. Market gap will always be filled. And when I say always, every rule has an exception, but usually always be filled. Stoch gave us a very nice jump up, corrected. Where did it stop here? 50, 61.8, went back up. Okay, golden ratios work. Sorry, golden ratios work. So dropped 50, 61.8, usually on a normal case where on purpose I'm looking at this horrible trend, but this was a nice profit. Dropped, corrected 50%, went back up, and then it was just dumped. And when it was dumped, you can see it was dumped hardcore. There was not even a correction here. So what am I looking for? Another thing to add, right? I think it's written here. The candle body, let's zoom in. Okay, I'll do this quick because I think most people know it. But the body is where the price started and where the price ended. The wick is where the price touched, where the price was, but it didn't end or didn't open at that time. So if we're looking at an up, a rising price candle, a green candle, the price started from here and it went up all the way here at some point of time in that 5 minutes because we're looking at the 5-minute chart. So every candle is 5 minutes. And that 5 minutes, it went from here all the way up here at some point. It doesn't have to be right from here all the way here. At some point, it visited that 5 minutes the top. And then it went back down. And the price of that 5 minutes closed here. So the body represents from the opening to the closing, and the wicks represent where it visited, where the price visited. So you have long wicks. The longer the wicks are, okay, the more, I'm going to say it and I'm going to say the disclaimer again. The longer the wicks are, the more chances for reversal if everything else matches. Don't be basing on that, but it's a very important thing to look at if everything else matches. I will give an example. Do you guys see the long wicks here? Yeah. So these long wicks mean struggle, struggle, struggle. I'm going to probably see a reversal, and it worked. Okay. So long wicks will usually show a reversal. This candle was green, white, you know, but green, like a positive candle at some point because the price visited all this way. If the price was here, that means it was higher than this. That means that this candle was a positive candle. And then the selling power went in. Again, this is 5 minutes, so it's obviously exaggeration, but the selling power went in and sold the stock or shorted the stock. And then we had a long wick. So that long wick meant, listen, dude, you're selling me milk at $1.20. I'm willing to pay 90 cents. You're very far away from the price I'm willing to pay. So I had to lower the price a lot. So seeing long wicks, I hope you guys like the milk example. This is how I used to teach it when I was visiting brokerages. The long wicks show us that there was a big difference between the realistic price to the price that is currently happening. And you will usually, disclaimer, usually see reversal after that if everything else matches. So if everything else matches, meaning the RSI was overbought, and you can see it touched it here, it wasn't exactly overbought, but it's almost overbought. And we had a not as strong trend, the wicks tell us that there's going to be a reversal. Okay, another nice thing to see. I'm looking at a downtrend. Oh, let's make it positive. I'm looking at an uptrend. Okay. What I want to see, if I want to time my entry, let's choose a normal stock for God's sakes. Whatever, expert. I don't know. I just need a clean chart. Okay. So what I want to see is the beginning of other colors. If I'm looking at an uptrend and I'm seeing 3 white candles in a row, 3 green candles in a row, I'm trying to find you guys a proper example. And I will wait until I see 1 candle that is green that will tell me, hey, the selling power is kind of starting to take over. But that doesn't mean that that's where I'm going to go in. That's a FOMO trade. I'm going to wait and see another 2 white candles. That means that the power is getting weaker. So in that trade, why can't I find an example? I just need a normal uptrend. Let's find you guys a normal uptrend. Look at that. That's beautiful. That's beautiful. That long wick here, that's a 5-minute chart. That's why I can't show you right. Okay, sorry, because I'm on a 5-minute chart. Don't look at stocks at 5-minute charts, please. Only on CFD trade, but try not to do that. Okay, so let's switch to a normal 1 hour, and I'll find you an example in a second once it's normal. Okay. All right. So look at this. All right. This is a bit massive, but again, we can try and explain it on this one. So I had 1, 2, 3 rising candles. Okay, and then I have 1 black one appearing here. That means I'm going to see reversal? No, I want to see more of them. Now I get 2 of them. That means going to see reversal? No, I want to see more of them. Or I want to see a bottoming tail. Bottoming tail, I will explain in a second. Bottoming tail means that I'm seeing a candle. I prepared everything on Apple and I'm showing it to you on the other ones. I have it ready on Apple, I'm sorry. Because I marked some examples instead of searching while you guys are waiting. This is a bottoming tail. So I had a huge downtrend. And then I get a long wick with a struggle, matches the RSI. You see that the arrow here is pointing at the RSI. So that means that I got a bottoming tail or a hammer, I think they call it in the Forex lingo, whatever. And This means that the buying power stepped in and said enough. Now, how lovely it is that it's sitting exactly on my resistance level or my support level. At that time was support level. So it matches. I have one indication here. I have a bottoming tail 2. I have a support level 3. It looks kind of oversold. I can step in here. But when will I step in here? I will zoom in, 15-minute chart. A 15-minute chart, okay? And I will see that they just picked up the price. I'm sorry, we're talking about the same example. It's just I had them ready. Same thing here. Look at that. Now, this is a different example. This is a gap, okay? All this is a gap. It's very important to understand. Right here, this area is a gap. Gap must be filled. There's no rules, but the normal situation will be that gap will be filled. Okay, so the gap was filled. All of this area had accumulation because the market closed on 139 and opened on 143, and people sold all their orders. And then the market said, okay, we had good news on Apple today. People agreed to pay 143, but they dumped the stock because they made nice profit. Now we can go and buy the stock again. And then the price will go up again. Maybe here, no, but you will see that Apple will go to 143 and it will visit this area, but the gap was filled. This gap, this area was filled, okay? So gaps need to be filled. And when you get a bottoming tail, you can know that this is a good time to enter. This is a doji, yes. A bottoming tail can be a doji, can be a hammer. I don't care. I'm not using the Forex lingo of looking for the specific exact. I don't care. I'm looking at realistically, what did the market think at that time? That's what I care about. I see that there was a big struggle here, and people said we're dumping Apple. And then I see that they started buying it up. I had a doji. The doji means that the buying power and the selling power were kind of equal. They were fighting equal. And look at that, I got another doji. Now, this is kind of funny because we have here also bearish convergence and the RSI, if you can see that, but that's for later. And so the gap was filled and the stock moved on. Let me move on because we are almost finishing. We have 10 minutes. Okay, so we switch time frames. We drill down, we switch time frames. No, I'm in the wrong presentation. Okay, bottoming tail. So bottoming tail I explained, or inverse hammer. Inverse hammer and bottoming tail are the same, just opposite. You can also call it a morning star. They look a bit different than each other, but they're kind of the same purpose. They're saying that the buying trend is ended and now it's a selling trend. Here we go. We got one right here. Let me mark it for you guys. Okay, so I got a nice uptrend flying up after a market gap. All this is a market gap. Okay, this whole thing is a gap. Come on. This whole thing is a gap. I'm on a 15-minute chart, so it may look big, but it's not that big. It's not serious. If I go to, I went to a 1 hour chart, but let me find it. Here we go. And so chat's blocking me. Okay. So all this area was gapped and the market had to fit it up. The gap was filled. Once the gap is filled, we can start moving to the next level because we accumulated the orders. People sold their Apple or they sold their Apple pre-market. Market opened here or here. We cannot know exactly where. And it went all the way up, filled up the gap with orders. Once the gap was filled, drop back down. Can anybody tell me if you guys understand what I'm saying here about the gap? Because gap is important. Okay, it's a very important thing. Okay, I don't want to over-explain myself. I just want to make sure we understand. Okay, so gap needs to be filled. It's not going to happen in the same day, same week. I don't know. But that area needs to be tested again. Every rule has an exception. It's a rule of nature that every rule will have an exception. But the norm will be that gap needs to be filled. Okay, and for example, here it wasn't filled, if I'm not mistaken. Let's move on. So I got a bottoming tail. Where are you, buddy? You were here somewhere. And when I get a bottoming tail, I will know the market jump back up. Same thing, morning star or hammer. You guys can watch it again later and you'll understand that there's a lot of Google examples on it. You'll find a million examples of people doing Morningstar and Hammer and how they made $1 million in 10 minutes from Morningstar or some bullshit like that. This is a Bible tale, a very nice one. And what I wanted to find is an example to show you that the more red candles you will see in an uptrend will obviously say that the uptrend is coming to its end. Okay, so we saw it on AME. I was trading AME. Look, I've been trading for 9 years, so I allow myself to enter a pump and dump trade. It's fine. I don't think it's something somebody should do when he doesn't understand what he's doing. And I'm not disrespecting anybody here. I'm just saying, don't go and have your first football match against Messi. You know what I mean? Play in the kids league for a while before you step it up, because a pump and dump is super dangerous, because the word dump means your money will go 50% down. Stocks don't move 50% a day. That is not the behavior of a stock. In my day, when a stock moved 3%, we were ecstatic. When a stock moved 5%, I would put a Christmas tree in the living room. We're talking about 50% up. And in AME, we're talking about 1,000%, if I remember correctly. 1,000% up, something like that. I went in at 420. I went at 460. I went in, I think. Crazy stuff. So this will murder your account, because the dump part, if you are not ready and you don't read the candles correctly, even though technical has very little to do with it, still human behavior creates the candle. I'll say it again. The human behavior is a herd effect. People think and act the same way, even though they all think they're so freaking special. They're not. We think the same way. So that creates the patterns of the candles. And that allows us to learn the human behavior, which is reflected on these candles, and to understand how to anticipate the next move, although history does not predict future movement. So when we see a pump and dump and we miss a couple of signals because we're new traders, that dump is going to hurt big time. And you're not supposed to be trading it, because you're supposed to be hurt 3%. You're supposed to be hurt 2%, 5%, because you're new. Here you got hurt 500%, 400%. I'm sure we worked hard for that money, you know what I mean? Donate the money. Give it to somebody who needs it. So we want to see those little details. We want to see that if we're seeing an uptrend, I want to spot black candles, red candles, whatever coming, and then I'll know that the reversal is happening. All right, let's move on. Fake out breakout. Okay, I said this before. I'll say it again really quickly. This is a fake out. It tested it and went back down. Okay, 10 people went in my store. 3 of them agreed to pay $1.20 for the milk. 7 of them didn't. So I had to lower the price of the milk again. Stupid example, I know, but it makes it so simple to understand. Good. So we do not buy breakouts. All those YouTubers and Instagrammers or whatever the hell, that's bullshit. That's BS. A breakout, first of all, cannot be this overbought. It can, but on the normal circumstances, when it's this overbought and the breakout is not strong enough and it's breaking through an important resistance level like this one, which is one of the highest highs on this graph, I wouldn't jump in on that trade. And luckily, you know, I really don't intend to choose these examples to prove my point. It just came out like this. But luckily here, it worked out. Maybe sometimes the breakouts will work. Great. But let me give you a little point to think about. Best breakouts happen pre-market. Boom. Best breakouts happen pre-market. So market closed at 136, market opened at 138. Between 136 to 138, there was a resistance level. The breakout happened when pre-market happened, okay? And then that confirmation allows the stock to rally up more, okay? That makes sense, please tell me. What are some of the best live charts to watch during trading hours? What do you mean best live charts? I work with TradingView and Weibo on the free tools that I want to recommend to you guys, because I don't want you buying anything. I don't want you buying anything. But free tools, TradingView and Weibo are very good. Nothing wrong with these charts. And TradingView is free unless you want the premium, you know, additional stuff. I use it because I want to make sure people are exposed to the union. So I use a lot of stuff, and I also trade full time. But these two are great. Okay, what else we got? Igniting bar, cool. Igniting bar, I recommend here a guy called Jared Wesley, American trader. He has a YouTube channel. He explains igniting bar in the best way possible, I think. I don't know if he's going to watch this. So I'm going to watch my mouth, but he says a lot of harsh things. So just choose your video. But he can explain igniting bar very well. Igniting bar means a peak of volume with a long body candle. Let's switch to the, it's just, everything is here, guys. Everything is here. Whoever doesn't understand what the hell I'm talking about, what is this guy, this bold guy's talking about nonstop? Well, here you go. So you have an igniting bar right here. This is bottoming tail. Okay, so tweezer bottoms, for example, if you want to click it, this is how tweezer bottoms look like. Okay, we have two kind of candles that look the same. The wicks here are kind of the same. Again, the wick can be longer or shorter. It's fine. It's not exact science. It just means that the selling power was dying down and the buying power was getting stronger. And that shows us that this is the end of the trend and it's time to reversal. Or it shows us a correction coming. Depends on the RSI, depends on the volume, depends on other things. Don't judge a trade by two candles. I'll say this again. Okay, but it shows us something is going down. Notice, by the way, this is real images we took from TradingView. Notice you have a lot of long wicks here that also testify for a reversal to happen. Okay, I want igniting bar. I'm sure I put igniting bar here. Okay, sorry, here we go. Igniting bar. So igniting bar must have long body and short tail. Nothing must have. This is must have because it's tutorial, but it usually will have. So it will have a long body and short wicks. Okay, short tail, short wicks is the same thing. If with high volume may represent trend reversal. So we will see the Nasdaq does this a lot. Nasdaq loves doing this. He will give you a huge long body at opening, and then it will give you 50% correction, which actually means behind the scene that people bought pre-market a lot. And then when market opened, they sold their position. This is why it's happening. And then it will go back to the true direction and climb with small bodies. Okay, Nasdaq loves doing that. Usually in the first green candle after a series of red candles. Yeah, sure. Higher chance of trend reversal if followed by a doji candle. Yeah, again, we were trying to put a lot of guidelines in one paragraph, but this doesn't necessarily all have to fall in play. Okay, if you have huge volume spikes and you see a long candle with barely any wicks, meaning barely any struggle between the buyers and the sellers, they all agreed on the price and they said buy more, buy more, buy more. That means we have a beginning of a buy position. Why? Because the people that buy first are the smart money. So the smart money stepped in piles and bought huge amounts of that stock. And then the slower traders came in, which usually it's us, me and you guys. I'm not saying you, I'm saying us, the retails, because we are usually the second or third or fourth to hear the news. And we are called the stupid money. Believe it or not, on Wall Street, they call us the stupid money. So the stupid money came in second and kept buying because we saw a huge rise. Ooh, something's going on here, or news came out or whatever. So the price kept going up. But the price kept going up in a very moderate way. It did not go up like it went up before because the buying power of institutions, it's much stronger than our power. Or the hype was much stronger when the news came out. And then when the news got older, only people that found out about that news jumped in, but those people are fewer than the people that are actually in the market. So that's why the candles get smaller. Always look for the logic behind the pattern. F the pattern, okay? Forget the pattern. Understand what happened there. And then you will understand what's going to happen, hopefully, potentially, in the market. That's important. Let's talk about 3-bar play, and I will end this with questions for 5 minutes. 3-bar play and 4-bar play. Again, Jared Wesley explains this much better than me. And I think he's also a super professional trader. And he's non-biased. I mean, he's not trying to sell you anything. So he's a great guy to watch. I'll write it in the chat. I really don't care giving any credit to whoever is due. I'll send you his YouTube channel later. And he's a great teacher, so I think you guys should check it out. He has this is a 3-bar play. So igniting bar, we just covered igniting bar, high volume, barely any wicks. Second bar will retrace about 50%. It could be 60, it could be 57, it could be 50, it could be 49. It's around 50%. Okay, don't take stuff as an order. It's around 50%. It will drop around 50%. The third bar will kick the second bar's ass. It will just go flying up and say, okay, these people went in, they bought, they made their $5 move on the stock or whatever it moved, and they exit the orders. But the hype is there, the interest in the stock is there, so obviously the price went flying back up. When do we enter? Third bar is crossed, the second bar. When the third bar crosses the second bar, we have a good entry point. I don't recommend it. I'll say it again. I don't recommend it. I will enter here. Why? Because I want validation. Because if this bar crosses this bar, so the third bar crosses the highest high, and this is where you're supposed to enter. I don't do that. I enter here. I will lose $2 or $1 or 30 cents, whatever, but I got confirmation. And I want confirmation on anything I do because the market likes to test numbers. Market is the most curious thing you will find. It likes to move and test the numbers again and again. So maybe it crossed it, but maybe it's just going to be a huge doji. So I don't believe in entering the third bar. This is a 3-bar play. You're supposed to enter here. I would enter on the doji here, okay? And retracing 50%, open the trade once highest high is crossed. For me, is open the trade on the 4th bar. 4-bar play is the same thing, only with 4 bars. Okay, this is a mistake. I told them to fix it, didn't happen yet. This one is black and this one is white. Okay, this one is black and this one is white. So we have a igniting bar, huge volume spike, happens with no wicks. Second bar is retracing, people are pulling out. Third bar is going up. 4th bar will cross the highest high. 4-bar play. All right, I kind of covered most of what I wanted to cover. Q&A time, if you guys have any questions. I would use those bars to exit, but what kind of rules will apply to a stock that goes 30, 50, 100% up? I mean, this is a different market, okay? Pump and dump, let's cover this really quickly with what I can give you on basic shit. Volume spikes, pre-market, I wanna see 30%, 50%, 40%, a ridiculous number of percent that went up. I wanna see it on a 5-minute Weibo. Go to Weibo. I'm gonna teach you some advanced shit really fast. Go to Weibo. Go to market here, okay? Here you have top gainers and active, okay? And in the phone, I don't do Weibo from my computer barely ever, but all right. You have a 5-minute option. I think it's somewhere here also. Yeah, it's here. Weibo, we are able. Weibo. It's a free software, I said it before. Okay, it doesn't have a URL. It's a software you install on your computer, okay? Go to Weibo.com and download Weibo. It's free for several months or something, but it's free. Anyway, top gainers will help you. Switch this, okay? I can't believe I'm teaching pump and dump to beginner webinar. Last 5 minutes, scan the market. You can also use real scanners, not Weibo. There's much more professional scanners out there like Finviz, F-I-N-B-I-Z, or you can use for Market Chameleon for pre-market, okay? Pre-market and aftermarket. Anyway, you see what's flying. You wait to see if you get a correction. Usually, let's do this UK time, usually around 7 to 8 o'clock UK time, you will see the true direction coming back. So if the stock gave me pre-market 30, 50, 70% up, or a ridiculous amount up, and it has a low amount of floating shares, and I see that happened and this happened, and a true direction that is supposed to happen between 7 to 8 o'clock UK time, then I will start seeing spikes up. Then you can enter. When you enter a pump and dump, in my opinion, enter on a DCA, dollar cost averaging. Don't go pumping down because maybe you're in the dump part. Okay, that's the risk. You don't know if you're in the dump part. A lot of people pulled out at AAME. A good friend of mine was trading AAME, and he told me about AAME, and I told him about AAME, but he pulled out at what, 15 or something, and stock kept going to 19.75, and we thought we were going to see reversal. So you want to DCA your way in, and you want to DCA your way out. Dollar cost averaging. You want to buy a little bit, buy more, buy more, buy more, sell a little bit, sell more, sell more, sell more. This is how you enter. This is how you exit, because they're going to test it. And when people run out of, I'm going to put quote unquote, when people run out of money to buy it, to keep pumping it, it's going to start giving you dips. And you think, oh, it's going to crash because it's a pump and dump. You're trading, you're swimming with sharks. So you're going to get bit. So what you want to do is you want to DCA your way out of there. So you get a dip, you understand, okay, I can DCA in, dollar cost averaging in, I will buy some and see if it's plummeting. If it's not plummeting and it's starting to correct, I will buy more. Okay, then I will get long wicks, candles, what we spoke about, that will show me reversals. I will dive into a 5-minute chart or a 1-minute chart. Don't do 1-minute chart on Weibo, they're not good. 5-minute chart or 1-minute chart, and I will see that the candles work for me. I will buy in more, and then I will exit. But please, why not make 20-30% per quarter on your money on I can't say safe, that's not regulated to say, but on by hedging your risk and going on safer assets that are more stable instead of going on a pump and dump. Because a pump and dump won't happen on Apple. A pump and dump won't happen on Tesla or NIO or Amazon. It will happen on low floating shares that are not, not stable. So if you miss it, you get, if you buy the dips on good stocks, and I'm not saying Apple, I'm just saying it as an example, but I don't trade Apple. I have it on my long-term portfolio, and I didn't open it since 1995. I don't care about it. No, but I'm saying you want to buy shares that if the market sells off, they are stable. OPTT, in my opinion only, and I'm not an advisor, but in my opinion only, OPTT is a stable stock. Market dipped on Friday nicely, right? OPTT gave me a low of 4.79, 0.78, something like that. That was the lowest low I got. On a $5 stock, I got a 21 cents low. If I was trading AAME, I'll get a 50% low. Money is very valuable, and earning it back is hard. So pump and dump is cool when you're there and when you catch a good opportunity. I'm not saying don't do it. I'm just saying that's not why you're here. 10%, 15% of your money on pump and dump, okay, if you want, if you think it's good. But 80%, buy Weibo dips, buy Spotify dips. There's so many crazy stocks out there. I can open my portfolio right now and show you so many good stocks that you will buy the dips and you will make good money. I'm not promising you a Rolex here, but I'm saying you can make good money on it if you buy the dips. And this is what financial institutions do. They buy the dips. Okay, so ARK has alerts. I do the same, by the way. I'm just saying an example. I know how ARK behaves because I'm looking at their buys and sells every night, like a lot of us. And I see that they're buying dips on the stocks that they want. So they have a list of stocks that they want to buy. They wait for dips. They buy when their alert goes off. They sell when the alert goes off. So they wanted a 10% up. They sell 10 on a 10% up. They have the alert goes off. They sell 20%. They dump 20% of the stock, for example, 15% of the stock, whatever. Again, institutions trade huge amounts of stock, so they cannot dump 15% because it will affect the price in some way. But they will dump some certain amount of stocks when they get the percentage of rise when they want, and they will buy a certain amount of stocks when they get the percentage they want. What are your plans with the trade union for the future? What would you like to see happen? I explained this before. I'm going to go and fast explain this too. I'm trying to build a union that we will have enough power together as one, which, by the way, we kind of got half of what we wanted until now, but I'll explain. We want to get pre-market orders in Europe. We want to get aftermarket orders in Europe. This is one of the first things we demand to have, like Americans have. Why, if I am in the UK or if I'm in Germany, I don't deserve access to pre-market? What the hell? What the hell? So if we unite and have a lot of people together to go to brokers, we will have our list of demands answered. So pre-market orders, aftermarket orders, no withdrawal fees. That's ridiculous. Nobody needs to take withdrawal fees. Nobody needs to take big spreads. Deposit fees are supposed to be a percentage above the credit card payment. So if I'm paying $1,000 to the broker and it costs him 1.5% to Visa company, It's logical he will take 2 or 3%. I can live with that. He needs to make money to sustain his job. But I've seen withdrawal fees, inactivity fees. Come on, inactivity fees. I get into long stocks, but an occasion run across these pump and dumps, always too late, of course. And I have been smart enough not to FOMO into them, just trying to get some knowledge on saving. I ain't judging anybody here, guys. I'm not judging anybody here. I don't want anybody entering this group and leaving this group with a sour taste in his mouth or losing all his money in a blimp. It's not how it's supposed to be. We are day traders and investors, whatever you guys choose to call yourself. It depends on how time frames, what's the time frames you're trading on. But you're not supposed to lose 50% of your account in one day. That's why I have a problem with the pump and dump. Back to the union. So once we get those terms of pre-market, aftermarket, no fees, equal conditions, I want to take it to the next step. And the next step will be that we will get analysts, real certified analysts, not me. I'm just a trader with experience, but there's certified analysts. I said it before, that can get us all the conditions we want, all the analysis we want, sorry. And we will be able to support all of this from affiliation. So when you sign up with a broker and you open an account and you make a deposit, the broker pays an affiliation fee, okay, to the affiliate for bringing you in. Some people call it introducing broker. It depends on the structure of the deal. Some people call it affiliate, but it doesn't matter. Money goes to a person for bringing you into the company. I want us to be that person. That's what I'm trying to do. So I want to take that money. Okay, and by the way, people that signed up with AAA, we get paid. We don't get paid in the same day or anything. It needs to be a period of time for you to trade and get verified, and then we get paid. And that money will go to salaries for analysts, for building a platform where we can actually get real analysis done. We can get brokers working for us. And I want to also get us a lot of union benefits. For example, I explained last week, we spoke to Tip Ranks and Seeking Alpha. We're working on sorting a deal. So Tip Ranks will pay an affiliate, like I am the affiliate. So I bring you guys to sign up with Tip Ranks, and they're supposed to pay me $75 or $100 or whatever. Instead of taking that $75 or $100, I just told them to decrease it from the amount you guys need to pay. So if a Tip Ranks account costs $300, you will pay $200 and you pay yourself for the affiliate fee, instead of somebody getting that money for bringing you. We don't want anybody getting the money for bringing us. We want to get the money for bringing us. You know what I mean? Any tips for tomorrow? This is recorded. No. What are the rules that tripping up getting? What are the rules that are tripping up getting? Why I'm not getting Americans? Okay, we're not adding Americans to the group at the moment because we are also working with a broker that has CFDs, contract of difference, AAA. And contracts of difference are illegal in the United States of America. And it's a big, big no-no. So once we have American brokers and we can differentiate the two groups, I think Canada too, yes. Canada, United States of America, and if I'm not mistaken, Belgium, CFDs are not allowed. And that's why we cannot mix them with us, because we are going to talk about CFD trading in the platform, and that will expose Americans to illegal activity according to their regulation trading laws. What we are trying to do is we're trying to find a way to have two separate groups. But this won't help us. I just want to make sure you guys understand. This will be great, so we have a better union, but this won't help us to get a better broker because European brokers cannot work with American brokers. I know eToro is trying to do that, but except them, there's nobody who does that. So if we get 1 million Americans in our trading room, which will be great, it will be fun, it won't help us get better conditions from European brokers and will not get us pre-market and aftermarket. They already have it, we don't, and we need to fight for us. And when I say we, I'm talking about Europe. We need to fight for Europe condition to have the same conditions as they do. Thank you, I appreciate all of you guys. Discord, we're looking into it. Natalia is looking into it. If you guys know her, she's in the group. She's a trader also, and she's helping us all a lot. She's looking into it. I'm not a computer guy. I'm an analysis guy. I'm a trader. So she's trying to understand how it works. Whoever can help us with it, please hit us up on the official phone and help us set it up, because she started the process. It's going to take a couple of days. The only problem we have with Discord is that the elder population will have an issue working with Discord, as far as I understand, because it's a bit more complicated. So I don't want people that are over the age of 50 or 60 having issues with joining the group. WhatsApp is very easy for everyone. We are checking the option of business WhatsApp that can also help. The only thing that bothers me on WhatsApp is that your phones are exposed. And if we accidentally enter an affiliate into the group without knowing he's an affiliate, because we don't do any kind of ID verification, he will steal your phones and you will get spammed by calls, which is what I'm very, very afraid of. So that's why I want to move it from WhatsApp. And we're working on building an app, but an app takes time. We got the first draft on yesterday, but it's going to be a long while until it can sustain a lot of members and have the functionality.
Would you be able to run through maybe a separate video or a live video of how to use the interface of AAA?
Yeah,
Like actually, because I logged on there yesterday and it's a lot different from what I'm using.
AAA is a lot different because you used to work with what, 212?
Yeah, trading 212, free trade. You're more fintech stuff.
Yeah, I'll answer you. He's saying that it's you guys hear what he's saying. So the easier it is for you to use the platform, the fishier it is to me. Okay. Trading is not supposed to be that simplified. Yes, I will make a video about how to trade with the AAA MetaTrader, but MetaTrader has been around for I think 15 years because that's real trading, and it's not supposed to be that easy to execute an order to the market. Okay. Because it's not supposed to be that easy to lose money. I will show you how to work with it on a video, but definitely there's a reason why things are getting so easy for people and people lose a lot more money. Just for you to understand. 89 to 93% of retail traders lose money. I'll say that again. And this is statistics that I got from the CISEC website. I may be wrong. Maybe it's different now. I don't believe so, but maybe it's different now. But as last time I checked, 89 to 93% of people that are trading from home, retail traders like us, lose money. That sucks. All right, guys. Thank you so much for your time. I'll try to do more of this if I have time, and we will be live on the group. I found out today that I'm very bad at keeping track of our time zone. Thank you, guys. Just do me a favor. I'm doing everything for free. I swear I'm not seeing a penny, and I don't want to see a penny. Get the word out. Get the freaking word out. Let's get to 2,000-3,000 people and kick some ass. Get the word out. We're not here to manipulate the market. We're not here to move a stock. We're not here to make $1 million a day and run away. We're here to become pro traders and make 20, 30, 40% on our money on a quarterly basis. And if we can grow and grow and grow, you guys are helping me out to make this better because I'm all day working on it. Thank you so much. Thank you, guys. Thank you, Froto. Get the word out.